Good afternoon, I'm Andrew Topf with Investing News Network, and I'm joined by Jeb Handwerger, who runs the Gold Stock Trades newsletter, and as a frequent speaker at an investment conference like PDAC. So today I'm going to be getting Jeb's insights on uranium. Jeb, it's great to have you on the show.
Thanks for having me.
So you've been a long-time uranium bull, even in the months following the Fukushima crisis. So what makes you still bullish on the sector?
Well, it's been almost 2 years since the once-in-a-millennium disaster at Fukushima. And after 2 years, the initial reaction was that there were some countries, such as Germany and Japan, which reevaluated their nuclear programs. Well, 2 years later, Japan is turning back on their nuclear reactors. They voted in a pro-nuclear party. Germany's getting a strong push for nuclear because they're dealing with rising electricity costs, and they're realizing that the costs of moving away from nuclear and going into renewables will be extravagant. So right now, after 2 years later, there's becoming a new sense of the future of nuclear power. We've reviewed what happened at Fukushima. We realized that it wasn't a nuclear accident, it was a cause of human error. These were 40-year-old reactors. There's new next-generation reactors that are safer, more economic, more efficient. And really the accident was the cause of old reactors, first generation. So there's a new sense that nuclear is reviving, but we're going to have a newer, safer, next-generation nuclear power. For instance, the United States Department of Energy is now funding research into small modular nuclear reactors over the next decade. And this is something that investors should be monitoring.
Okay. Do you pay much attention to the uranium price, considering that building nuclear plants and developing new uranium mines is a long-term game?
Well, I think in addition, I do take the uranium price into account, but it's important that investors see what companies are doing. For instance, last year when the uranium price was going down to the low $40 area, there was a major acquisition. Chicago Bridge and Iron acquired Shaw Group, which is a nuclear company, services company. This was at the time when the uranium price was down. But this indicated that they had a longer-term approach, and they saw that the future viability of nuclear was alive. We are also seeing increased mergers and acquisitions and takeovers. For instance, Uranium One was just taken out by the Russian ARMZ, and they went private. Then a few weeks later, we heard Denison take out Fission Energy, which I spoke about a few months ago. Fission Energy was a takeover target that I included in my work. So we're seeing increased merger and acquisition, more capital coming into the market, and it's really important for investors to not be shaken out by short-term price fluctuations in the uranium price and take a longer-term approach to look into the sector.
Okay. You mentioned ARMZ. It's a Russian state-controlled company buying the remaining shares in Uranium One to make it private. Uranium One is a producing uranium mine in the Powder Basin River region in the U.S. So what's behind the Russian interest in U.S. uranium?
Well, the Powder River Basin has been producing uranium for close to, I think, about 40 to 50 years. Cameco's in the Powder River Basin. Uranium One is in the Powder River Basin. It uses in situ mining, which is a technology that it's not a conventional where you mine, you inject water and bring out the uranium. It's much lower cost than some of the conventional deposits. So in this sort of environment, that might be attractive, and there's a few other near-term U.S. producers in situ that are very low cost, very attractive, and it's going to increase for near-term production in the U.S. because the U.S., you have to remember, 20% of the United States power comes from nuclear. 104 nuclear reactors, the most uranium used in the world. The U.S. is the largest consumer of uranium. but only 4 million pounds comes from domestic production. The rest is being made up by secondary supplies that are coming from the Russian HEU agreement, the megatons to megawatts program, where they refurbished the nuclear warheads and turned it into usable uranium fuel. But that's going to expire at the end of 2013. That expiration, combined with increased demand from Japan, new reactors being built right in the United States and all over the world, Europe, Saudi Arabia, United Arab Emirates, and of course China, India, and Russia, which is, there's huge growth there. So near term, especially in the United States, near term producers are very critical, and investors must keep a close eye on that.
Right, okay. And where do you see the majority of the new mines being developed? The new uranium mines?
I think the near-term U.S. producers are very important. The Athabasca region, where we just saw a takeover of fission energy by Denison. We're going to see more interest in the Athabasca basin. Europe only has 160 nuclear reactors, yet they only have one operating uranium mine in the Czech Republic. And there's one development project there, so there's going to be more increased interest in European domestic uranium production. And we're seeing a shift because a lot of the uranium, a good amount, like from Areva, a large part of their production came from Niger. They just sent the troops into Niger because of all the chaos there with Al-Qaeda. So there's increasing geopolitical tension in Africa, with Mali and Niger. Niger, I think, supplies close to a significant portion to Areva, who's one of the largest nuclear powers. 77% of France's electricity comes from nuclear. So they're going to have to really secure supply, either from potential European mines, or they're going to have to look into the Athabasca Basin, which has the highest grade uranium mines in the world, or they may look into the near-term U.S. producers.
Okay, it's good hearing your insights, Jeb. And I've been Andrew Topf for Investing News Network. Thanks for joining me.
Thank you.